Most people lose money in crypto, not because they choose bad coins, but because they invest emotionally. At the beginning, everything feels exciting. Bitcoin goes up, people post profits everywhere, and social media makes it feel like everyone is winning. Slowly, pressure begins to grow. Pressure to buy quickly, pressure to not miss opportunities. And that pressure changes beginners. Instead of investing calmly, they react emotionally. They watch charts constantly, search for timing, and believe success comes from buying perfectly. But the market does not reward perfection. Crypto moves fast. Prices and sentiment change constantly. And without structure, this environment becomes emotional chaos. When the market pumps, people feel confident. When the market drops, people panic immediately. Slowly, emotions become the strategy. That is why beginners constantly change direction. One week they feel bullish. The next week they feel afraid. This emotional instability creates destructive decisions. People buy emotionally, sell emotionally, and lose emotionally because emotional investing breaks during volatility, and volatility is normal in crypto. If your strategy depends on emotions, the market destroys confidence. That is why beginners lose money, not because they are unintelligent, but because they entered the market without emotional control, structure, or a system. And systems matter more than excitement. Systems reduce emotional decisions, while emotional investing creates emotional reactions, and emotional reactions destroy consistency. Many people enter crypto feeling excited, but leave disappointed because they approached emotionally, and social media makes this worse. Online, everyone posts profits, but almost nobody talks honestly about fear or mistakes. So beginners begin believing that investing should feel exciting and easy, but real investing feels different. Real investing feels slow sometimes, quiet sometimes, even boring sometimes, because investing requires patience. Many beginners struggle with that because modern attention expects fast rewards. Crypto becomes addictive emotionally, checking charts constantly, refreshing prices constantly, watching social media endlessly. Eventually, that emotional pressure becomes exhausting. That is when mistakes happen. People buy too high, sell too low, and chase coins. Most of this happens because they never build structure, and structure changes everything. Structure creates stability, and stability matters during volatility. That is why strong investors look calm during corrections, not because they enjoy losses, but because they understand strategy. They understand risk. They understand time. Understanding creates emotional stability, because now, short-term movement feels less dangerous emotionally, and emotional stability changes decisions. You stop reacting constantly, chasing constantly, and panicking constantly, because now you finally understand that successful investing is not about perfect timing. It is about consistency, and consistency is what most beginners lack. Humans naturally chase certainty, but markets do not provide certainty. Trying to predict every movement creates stress, and stress creates mistakes. So instead of trying to predict everything, there is a better approach, calmer approach, a sustainable approach, a strategy designed to reduce emotional pressure and help investors build slowly without reacting emotionally. And once people discover this strategy, everything begins to change, because now investing stops feeling chaotic and starts feeling structured. The biggest mistake most beginners make is trying to be perfect, but successful investing was never about perfection. It was always about consistency. And this is where everything changes. And this is where everything changes. Because once people understand this, they stop chasing perfect timing. And this is where DCA begins. DCA means dollar cost averaging, a strategy where investors buy slowly over time instead of predicting perfect entries. And that changes everything emotionally, because now you stop fighting the market daily. You stop stressing over candles. You stop panicking during corrections. Instead, you build slowly. That is why DCA became one of the most trusted strategies for long-term investors, not because it is exciting, but because it is sustainable. Most beginners think investing must feel intense to work, but real investing usually feels boring. And boring is good, because boring removes emotional chaos. Imagine two investors. The first investor waits constantly for perfect timing. He watches charts daily, checks social media endlessly, and delays decisions. But the market keeps moving, and eventually, fear controls everything. Now imagine the second investor. Instead of waiting for perfection, he buys slowly over time. A little today, a little next week, a little next month. He builds consistency, and consistency changes psychology. Because now, market movement feels less emotional. If prices rise, he keeps building slowly. If prices fall, he keeps building slowly. Because his system does not depend on emotions. Because emotional investors constantly change direction. But structured investors follow systems, and systems create stability. That is why DCA works well for beginners emotionally, because it reduces pressure. You no longer feel that everything depends on one perfect moment, especially in crypto, because crypto is volatile. Prices move fast, corrections happen often, and beginners without structure usually panic during those moments. But DCA changes the experience, because corrections stop feeling like disasters. They become part of the process, because long-term investing is not about controlling markets. It is about controlling yourself. That is the real challenge. Emotions. Fear destroys more portfolios than bad projects. That is why emotional control matters in crypto, and DCA helps build that control. Because instead of reacting emotionally, you follow a schedule, and schedules reduce panic. That is why many investors prefer simple systems. Simple systems are easier emotionally, because wealth is built through consistency over time, not emotional decisions. Many beginners misunderstand investing. They think success comes from finding the next big coin, but often, success comes from surviving longer, because survival creates opportunity. If you panic and quit early, you never reach long-term growth. That is why patience matters, and patience becomes easier when emotions become smaller. That is exactly what DCA helps achieve: a calmer experience, clearer strategy. DCA does not remove risk completely. That is why security and risk management must always come first. Never invest money you cannot afford to lose. Never chase unrealistic promises. And never believe that crypto is fast money, because that mindset usually ends badly. The people who survive long-term usually move slower. They think long-term. They protect capital. They focus on consistency, and consistency creates strong foundations. That is why DCA fits long-term investing well, because it turns investing into a process, not emotional reactions. You stop checking prices constantly. You stop reacting emotionally to movement because now you understand that nobody controls markets. That is why systems matter. Systems protect people from themselves, especially in crypto. Remember, please, security always comes first. Risk management matters more than fast profits. Start slowly, think long-term, and build carefully.